Hello and welcome to the channel. I appreciate you stopping by. This video covers the S&P price action for the market close on May 13th. We've been tracking these anchored VWAPs tied to these specific dates for several weeks since the tariff announcements to establish where some key points of support and resistance might lie. I can report this morning that they are all now increasing. Many of these were decreasing for some time, but they have all turned around and are now increasing. We also have an increasing 20-day moving average. The 50-day had been declining for quite some time, but it is now rolled over and moving higher. And the 200-day is also moving higher and has been for several days. Since the low on April the 7th, we had quite a bit of volatility for several weeks as these tariff negotiations and recession concerns were at play. But we have since blown through all of these resistance levels, including the 200-day. And we appear to be holding those, at least for the last 2 days, where we broke above 2 days ago. One point of concern is the RSI is beginning to move towards an overbought condition. We're currently sitting at 60.07 at the moment. So this will provide some upper boundaries to where we might trade as we get into that overbought condition. The MACD has also been moving positively since about April the 22nd or 23rd. Both the momentum line and the signal line are above the midpoint of zero. These can stay in this condition for quite some time, but it does provide some upper level resistance to the S&P. If we take a look at the VIX, we've made really good progress here after peaking at 60.13 on April the 7th. We've had a steady decline since then. We have moved below this number of 20, the VIX level of 20, which indicates high volatility. So that's really good news that we've dropped below that for the last 2 days. Currently it's sitting at 18.22, and a real comfortable level on the VIX would be somewhere where the green line is sitting around 16. Taking a quick look at the breadth for the SPX, looking at those components that are above their 200-day, 50-day, and 20-day moving averages. For the 200-day, at least 52.6% of those are above their 200-day moving averages, indicating fairly broad breadth. We have over 66% above their 50-day moving average, and we have 74% above their 20-day moving averages. All good signs moving forward. I hope this brief market overview was helpful. Thank you for stopping by today. I wish you the best in your investing journey, and we'll talk again later. Thank you.